We're jumping straight into energy fuels today. Everyone is watching the price action, but the real story is their transformation into a Western critical minerals empire, combining uranium dominance with a massive rare earth expansion.
Exactly. You're tuned in to the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And just before we really get into it, if you want to stay ahead of the curve on these kinds of companies, make sure you subscribe and hit that like button. It really does help us get this info out there.
So energy fuels. This is a really interesting one. I think if you just, glance at the ticker, you see the volatility, the volume, you might just write it off as another commodity play.
Just another miner, right?
Exactly. But when you really pop the hood, you realize it's not one business at all. It's more like two completely different companies trying to live in the same body.
It's kind of a Jekyll and Hyde thing, isn't it? You have the uranium business, which is, steady, reliable, is the bread and butter. And then you have this huge, almost aggressive bet on rare earth elements. It feels like they're trying to be the Google of mining or something, doing everything at once.
That's a pretty good way to put it in terms of ambition anyway. But I think we have to start with the Jekyll side of it, the cash cow.
The uranium.
Yeah, the uranium. Because without that business firing on all cylinders, the rest of this whole plan is just a very, very expensive science project. And the numbers we saw out of 2025, their execution wasn't just good, it was, frankly, stellar.
Stellar might not even be strong enough. We look at mining companies all the time, and usually just meeting your guidance is like a win. Mining is messy.
So messy.
But these guys didn't just meet their goals, they crushed them. We're talking of a massive operational beat.
Let's put some numbers on that because they really tell the story. In 2025, they mined over 1.6 million pounds of uranium. That beat the top end of their own guidance by 11%. Now, for anyone listening who isn't deep in this world, you have to understand, things go wrong all the time in mining. Equipment breaks. Or grades are off. Weather, exactly. So to beat the high end of your own forecast by double digits,
right.
That's a big deal. It shows a level of discipline you just don't see very often.
And just to be clear, when we say mined, they're actually processing this stuff, right? It's not just a pile of rocks somewhere.
Correct. And that's a super important point. The White Mesa Mill in Utah, and we're going to talk a lot about this place, it processed more than 1 million pounds of finished uranium. The yellow cake.
The stuff they can actually sell.
The stuff they sell. And speaking of selling, this is the part that I think really matters for the stock. They aren't just, hoping the spot price goes up. They've been locking in contracts.
Yeah, I saw that. New long-term deals with U.S. utilities that go all the way out to 2032. That seems huge for stability.
It is huge. It basically creates a financial floor for the company. They have revenue visibility for the next, 7 years? Management isn't waking up every morning sweating the day-to-day price of uranium. They know the checks are coming in.
So that uranium business is kind of the safety net. It's the engine room that keeps everything else running.
Exactly. It de-risks the whole thing. If uranium prices take a dip for a few months, the lights stay on, no problem.
Okay, so let's unpack the strategy. They've got this steady, reliable cash flow. But instead of just, paying out a fat dividend, they're taking that money and betting it on something way riskier.
And this is where the story completely pivots. They're using those uranium profits to fund this empire-building strategy in rare earth elements, REs. This is the hide part of the story.
The big, ambitious, maybe even a little scary part. But I have to ask, why them? There are other rare earth companies out there. What makes energy fuels think they can win where so many others in the West have, failed?
It all comes back to that one asset, the White Mesa Mill in Utah. That facility is their crown jewel. It's the only conventional uranium mill in the United States.
The only one.
The only one. But, and this is the key, it also has the unique licenses and the chemical infrastructure to process rare earths. Nobody else in the U.S. has a facility like this that's licensed and operating. To build one from scratch today, you're talking, 10 years and billions of dollars in permitting? It's not going to happen.
So that's a massive moat. You can't just copy that. So they have the factory. But a factory's no good without raw materials, which brings us to the big news, right? The ASM acquisition.
This was the huge move, a $299 million all-stop deal for Australian strategic materials. And this is where the plan goes from just, interesting to potentially world-changing.
World-changing is the big claim.
It is, but with ASM, they're not just buying a mine. They're buying the missing pieces to build an entire global supply chain. ASM has projects in Australia, but also a metals plant in Korea and plans for one in the U.S.
All right, this is their whole mine to metal thing. Can you break that down? Because I think a lot of people just think of rare earths as, digging dirt. It's way more
Oh,
complicated.
it's infinitely more complex. Think of it like a relay race. Right now, a Western company might mine the ore, concentrate it, and then they hand the baton to China.
And China runs the rest of the race.
China runs the rest of the race. The refining, the separation, the metallization, they control something like 85 or 90% of the entire market. It all goes through them.
And Energy Fuels wants to, what, run the whole race by themselves?
That's the plan. They want to cut China out of the loop. Mine the ore, whether it's from the U.S. or Australia or their projects in Brazil and Madagascar, ship it to White Mesa to make the oxides, and then use the ASM tech to turn those oxides into actual metals and alloys.
And these are the metals that go into, what, EV motors, wind turbines, F-35 fighter jets.
All of it, exactly.
Mm-hmm.
This is as much a geopolitical play as it is a business one. The Pentagon is not happy that its most advanced jets rely on a Chinese supply chain. Energy Fuels is basically pitching itself as the American solution to that problem.
Okay, so they're building the supply chain, but what are they going to feed into it? Let's talk about the Vara project in Madagascar.
Yeah.
The numbers in that feasibility study were kind of jaw-dropping.
They really were. The study showed an after-tax net present value, an NPV of $1.8 billion, and a mine life of 38 years.
38 years. That's not just a mine, that's a career. That's a generational asset.
It's massive. If they get that thing running, it could feed the White Mesa mill for decades. It's the raw material engine for this entire empire. See, the mill has a huge capacity, and to make it profitable on rare earths, you have to feed the beast. Vara is the food.
So if we zoom out, they're killing it on uranium, they're buying assets in Australia, they're developing a giant project in Madagascar, and they own the only factory in the U.S. to process it all.
And it connects perfectly to the biggest macro trend out there, the whole AI energy trade. All these new AI data centers, they need unbelievable amounts of power. 247 baseload power. That's nuclear. That's uranium.
And the hardware itself, the servers, the robots.
All that tech needs high-performance magnets. That's rare earths. So Energy Fuels is sitting right at the intersection of both of these massive trends.
Okay, that's the bull case. And it sounds incredible, honestly. But we have to look at the other side. There are some serious red flags here too, aren't there?
Oh, absolutely. There are some very real, very scary risks. This is not a slam dunk. If this was easy, someone would have done it already.
So let's start with the most obvious one. The valuation. When I look at the stock price compared to what they're actually selling today, it's a little eye-watering.
It should be. The stock is trading at a price-to-sales ratio of around 40.
Wait, hold on. 40 times sales. You don't mean earnings.
No. Sales. Top-line revenue. For context, the industry average for a mining company is closer to 4.
So you're paying 10 times the industry average for every dollar of revenue they have today.
You are. That's not a mining multiple. That's a tech stock multiple. That's NVIDIA territory.
Wow. Okay, so what does that tell us?
It tells you the market is pricing in absolute perfection. It's assuming everything goes right. The uranium price stays high. The ASM deal closes smoothly. Madagascar comes online. All of it.
And if they stumble, if one of those things goes wrong,
then there is a very, very long way to fall. Some analysts have targets around, 1150? That's a huge drop from here. The argument is basically that you're paying for a rare earth giant that doesn't exist yet.
You're paying for the dream, not the reality.
Exactly. And it's not just the valuation. We saw some pretty ugly numbers in the Q3 report last year, specifically on margin.
Right. The margins dropped from 54% down to 28%.
Cut almost in half.
Why? I mean, uranium prices are high. Shouldn't they be making a killing?
You'd think so. The reason they gave was that they were selling higher cost inventory. Basically, the pounds they sold that quarter were more expensive to produce. It just shows you how lumpy the business can be.
But management has an answer for that.
Yeah.
Right. They're saying it's temporary.
They are. They claim it'll get fixed once they start processing the lower cost ore from their Pinyon Plain mine. They're telling investors, just wait, the margins will bounce back.
But investors have to see it to believe it. Trust us only goes so far.
And that gets us to what I think is the biggest risk of all, which is just execution and complexity.
I mean, it feels like they're juggling chainsaws on a unicycle.
Yeah.
You've got operations in the U.S., this new deal in Australia, a project in Madagascar that's 3 continents.
It is unbelievably difficult. And let's be honest about Madagascar. It's a country with incredible resources, but it also has a history of political instability, permitting delays.
Yeah, that project has been paused before, hasn't it, by the government?
It has. It's back on track now, but that political risk never really goes away. And then you have to actually integrate the ASM deal. Merging a U.S. miner with an Australian tech company with assets in Korea, that's a nightmare.
And the science itself. I mean, they're trying to do commercial scale heavy rare earth separation. That hasn't been done successfully in the U.S. in forever.
Decades. They're basically restarting an industry that died in the West 30 years ago, separating things like dysprosium and terbium. That's really, really hard chemistry. If the tech doesn't scale or the costs are higher than they think, that 40x multiple is going to look really silly, really fast.
Okay, so the picture's clear, huge upside, but massive, massive risk.
That's the whole story. So what should you be watching right now? Because the next 30 days are critical.
They really are. First up is the earnings report that's coming in late February 2026.
And here's what to look for. Forget the headline numbers. Look for one thing: margin recovery.
Right. Are they back to processing that cheap ore from Pinyon Plain? Management promised 1.1 to 1.4 million pounds from there. We need to see it in the profit margins.
If margins are still stuck down at 28%, the stock will get hammered, no question. Second thing, watch the ASM deal progress. It's supposed to close mid-year, but we'll see filings before then.
And we're looking for any regulatory hiccups, right? Like from the Foreign Investment Review Board in Australia.
Exactly. Any sign of trouble there could spook the market. And the last thing is any news on commercial milestones at White Mesa. They recently produced, 29 kilograms of dysprosium oxide?
And dysprosium is that super high-value stuff for magnets in EV motors.
It's the secret sauce. But 29 kilos is a pilot batch. It proves the science works. Can they scale it to tons commercially? Any press release about scaling up that process would be a huge validator for the whole thesis.
So a lot to watch. This is not a set it and forget it stock.
No, it's going to be a very busy, very volatile month.
Okay, let's bring it home. We have a company that's executing perfectly on the safe bet, uranium. But they're taking all that cash and betting the entire house on the risky bet, becoming a rare earth giant.
That is the core tension. You buy the stock for the uranium safety, but you're really staying for the rare earth lottery ticket.
And here's the final thought I want to leave everyone with. It's a question to sort of chew on. Is Energy Fuels a mining company, or is it a critical technology infrastructure play?
That really is the billion-dollar question, isn't it?
Because if it's just a miner digging rocks, it is wildly overpriced at 40 times sales. But if you see it as the critical infrastructure for the AI era, providing the raw materials for both the power and the hardware, then maybe it's just getting started.
It's a totally different valuation model depending on your answer.
Exactly. That's the lowdown for today. Thanks for joining us on the Easy Money Show.
See you next time.
And don't forget to subscribe. We'll see you then.